Okay, good afternoon, everybody. Welcome to the weekly take on the market. Today is Friday, February 16th. It is 1:05 Pacific time. The market just closed. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. It's very important. I'm not licensed, can't tell you what to buy, what to sell, what to hold, how much to have. There's a lot of things that fall under our compliance umbrella. But these webinars are vetted with this disclosure, so I can be more open and talk more freely on this platform. A lot of you send emails to us, and I really like all the emails that I get, and so I will answer them. Um, but sometimes I might have to give you a cookie cutter answer based on compliance, based on the question that you have. It just kind of falls in that gray area. One of the great perks of working here is being able to invest in stocks ourselves. So I have a lot of the stocks you guys own, I owned or have owned, and I'm all in. I have every single type of brokerage account possible, I think. Coverdale's, Roth IRAs, STEP IRAs, 401ks, uh, family. And so I really enjoy the process of the treasure hunt of the stock market, so to speak. Okay, so let's jump right in. Market thoughts. Then we'll do industry groups. We'll do stocks to watch. I got a lot of stocks, so I'll try to get to that fairly quickly. And then the quote of the week, of course. So I think I had this last week, and I thought I would do it again because, gosh, it's kind of eerie how it's following this process. The market feels like it's getting a little bit tired, for lack of a better word. You had some reversals today. We'll go over in some of the key stocks. And so if it follows this um, process, and I can't remember. I think last week I talked about who tweeted this, but the source is Carson Investment Research. Um, the market should actually go negative sometime in this, next quarter coming up. Negative on the year, in other words. So from positive to negative, only slightly, but that would be a nice little shakeout. And then you have a lot of runway into the election, and then after the election. So I kind of hope it follows this process. I'm not going to invest based on it exactly, but it is in the back of my mind. I know cycles exist. They exist everywhere. So it makes sense for there to be kind of a cyclical headwind and or tailwind. So keep this in mind. It'd be interesting to see how it plays out. Uh, from Jason Gepfert. I apologize to Jason if I messed up his pronunciation of his name. The Russell, and this was yesterday, I believe, FYI, because the Russell was up to 34 points for the year, and SMCI accounted for 26 of them. This kind of goes to my feeling about the indexes, why I don't put so much weight in them like I used to, and they're just not structured that well to make great decisions on, at least for me. So I've said it before. The stocks that I'm in, number one, that's most important to me. The stocks I wish I was in, that would be number two. So if I don't own SMCI or I don't own Nvidia or don't own CrowdStrike, very, very important stocks to our process. These would be, high on my list of watching and seeing how they're acting. Um, am I making progress? Very important. Probably really would be one B. The stocks I own, the stock, my progress. They kind of go hand in hand. Honestly, now that I think about it. And then, would be the indexes. I know they're important. I don't want to give up on them, but they're just very tricky. I don't know. I assume the indexes were down today, but if you're using the index to make a decision on SMCI, you got run over today. So and I know most of you aren't doing that, but so they're important. The indexes are important. Like I said, I don't want to give up on them, but you have to understand kind of how they're structured. So the Russell is market cap weighted, and I think the market cap of SMCI after yesterday was just like, I should have taken that screenshot. I think the next stock was, it was a stock that we would know. I think it was ELF, the next or Celsius. I should have screenshotted that, but it was a Grand Canyon sized chasm between the market cap of SMCI and the second stock in the list on the Russell 2000. I think that's it. So let's pull up the charts. So here's a chart of the NASDAQ. Because of the big volume yesterday, you're not going to get any distribution day today, but I guess the NASDAQ was down almost 1% today. So you finally, it got a little bit of spot of bother. You gap down and, you've rallied up for a couple of days, but you can't make a higher high. So this is 1, 2, 3, 4 trading days where you haven't made a higher high. It's not that many, to be honest with you, but the longer you go without making a higher high, the more likely you'll get into a correction. So look at here, you make a higher high in about 9 trading days. Here, you make a higher high in about, I don't know, a dozen trading days. Lots of higher highs here. And then you get this little correction, but look, higher high in 1, 2, 3, 4, about 8 or 9 trading days. So that's something that I would count and keep in mind. The longer we don't make a higher high, the more likely we'll be in some type of correction. But it's we're 1, 2, 3, 4 days off the high. So don't read too much into that. You don't want to just, get overly bearish in a hurry. It just doesn't work that way. We're still above all the moving averages, except maybe the 10-day where, the 10-day is right on it, down 0.1%. The S&P, so it got a little bit higher than the NASDAQ, which if it had made a new high, and then I would call that a possible negative divergence, because those are my favorite indicators. It was such a good one in the 2022 bear market. So you get a higher high here on the S&P in December of 21, but the NASDAQ couldn't. Those are really good signals. So when you have a bifurcation of the indexes, it works both ways too. If you get an index making a low, but another one isn't, that's a positive sign as well. So that's something that I would look out for. It hasn't signaled yet, but that's something that I would look out for as well. If let's say over a handful of weeks, the S&P makes a high, but the NASDAQ doesn't, then that would be a kind of a shot across the bow warning signal for me anyways. Let's look at the Russell, since I pulled up and we'll use the IWM. And had a good day yesterday, obviously, with the strength in SMCI, but today gave it back as well. So that's I don't know, it's not very, very low on the total poll of things that I watch. I don't even have the IWM on my screen of the stocks and stuff that I'm watching. I do watch the indexes, but I don't watch the Russell, the other indexes, I should say. All right, let me turn off my camera too. That way, in case as I go through the stocks and stuff, you can see them a little more clearly. All right, so let's jump to the industry groups. I think that's all on the indexes, at least in the US. Industry groups. Scroll up. Number 1, computer hardware peripheral. We all know who that is. Medical biotech, very interesting with the number of stocks in there that it can have that strong a ranking is pretty impressive. The really big boys are acting well. There's some others. Biotech's a tough group for me. Uh, you get those, you see those ones that are up 80% in the day, and you see the ones that are up down 80% in the day. And it's hard to risk adjust for those types of moves. So if I'm buying biotech, they tend to be really big, like Vertex or well, I haven't bought Amgen in years, but stuff like that. CRISPR's interesting to me, but I haven't been in that one in a while. Computer software security, I like that group. Great stocks: Zscaler, CrowdStrike, Palo Alto. Semiconductor, fabulous. Well, that too. Fabless is the Nvidias of the world. Apparel, shoes, great group. Energy, coal, it's lost some of its a little bit. I haven't looked at the coal stocks in a while, but it feels like the group is made number one and is moving down slowly. Software, financial, semiconductor equipment. Let's see if there's anything. Wow, is that right? Last week? So finance credit card payment, very interesting. Wow, 131 to 15. So that is a group that I'm going to do. Now I know it's Visa, PayPal, MasterCard, StoneCo. What else would be in that group? Square. But that would be a group that I'll do some work on this weekend. And there was I think there was a new issue in that group, international stock. But so very interesting. That type, I don't recall I'm seeing that type of net change in 1 week. I bet it's happened before, but man, I don't remember that. So, all right, well, there you go. You've got at least one homework project. Dig into the finance payment. Adyen is an international stock that I've owned before. ADYEN is the name of the company. The ticker is there's a couple of them. This is the big one. It's just the chart's just doesn't trade. So you really want to use this one just to get a better idea of the chart. And you want to use the weekly. You can see it gapped up on earnings, up 53%. Revenue wasn't all that exciting, obviously, but I've owned that one before in this go period. So that would be something I'd like to see it build a base. All right, computer software enterprise, leasing, transportation, ship has held up really well. I've kind of taken my eye off that group. Frontline, TNK, they've done really well. So in restaurants, Texas Roadhouse, let me add that to the list. TXRH had a great day today. There's a lot of diversity in the groups. I think the group action is very, very positive. It just creates so much opportunity potential for you when there's more groups to choose from. Obviously, I guess doesn't need to be said. All right, so let's start with the stocks. I guess, do we want to start with SMCI or end with it? Let's start with it. Let's definitely start with it. So, let me remove my markups too. Markups. So, is this a climax top? Well, I think the short answer is yes. Now, the only kind of caveat from the book, from Bill O'Neill's book, How to Make Money in Stocks, is the climax top doesn't usually occur so close to the base. So 27 days from the breakout and you get a climax top, but everything occurs so much faster nowadays. So I think it's a climax top, but that doesn't mean it can't do this again, because Taser and Monster, I think, had a couple. Taser had like 3 climax tops. So it can happen again. It can make another run. This could be the, potential high tide flag or something like that. I mean, you're already 20% off the high, I would guess. Oh no, only 9%. Um, yeah, it printed 10 in the morning. It was up 1077. So that's a valid print. I remember in the pre-market was up already like 70 points. Full disclosure, I am short SMCI and have been. So I had a fantastic day today, but I got run over a few times yesterday. So I'll try it and get stopped. I'll try it and I'll get stopped, and I'll try it and I'll get stopped. But it finally worked. Uh, don't try this at home is probably the advice I would say. It was, I just couldn't help myself. It was just too tempting. I was certain it was a climax top, and I was certain it would do what it did today. I didn't think it would do what it did today in one day. I thought it would take a handful of days, but I had a lot of confidence that this was going to happen. I just didn't know from where. It could easily have occurred from 1400. So that's what makes it hard. But it had all the trappings. XYZ bank comes out and gives it a 1040 target. The stock's 800 at the time. It reminded me very much of Schwab when Schwab topped. And well, I don't want to misspeak. So let's look. Let's just make it easy on ourselves. I think it was early 2000 or 1999. So when Schwab topped here, XYZ Bank came out and gave a massive price target, and Bill was selling into this, like incredible, buying here, buying here, buying here, like unloading the whole thing all there, is my understanding. Not at the very high, of course, but if you look at, let's see if the daily shows it, on this gap, I think. So maybe the that day or the next day. And so this looks like if we 414.99. Very interesting. This is interesting to me because I lived through this, but gosh, this stock topped in April of 1999, and the market was fabulous the whole year, pretty much one of the greatest years in Nasdaq history, if not the greatest. And yet, one of the leaders topped in April. That was the top. So you can see this looks very much like SMCI, and if you fast forward, when they top, they top. They top. Now, this is a long way from the pivot. So this is, well, let me go back. I want to go. This is 27 weeks from the pivot. Okay. So a lot further along in that regard versus SMCI. What are we? 5, 6, 7 weeks from the pivot for SMCI, 6 weeks from the pivot. So that's the one thing it's missing. That's the caveat on this. But other than that, you've got, largest up day, big volume reversal. This will be the biggest volume it's ever traded, 33 million, easily surpassing the the biggest, that day when it gapped up. So at best for SMCI, well, look, can it go to 850 on Tuesday? Sure, anything can happen. But I'd be flabbergasted if it took this out within the next 6, 8 weeks. So you're looking at sideways to down. If you go back and study these, now these names aren't as strong or as quality as SMCI. One thing about SMCI is if they do what Wall Street thinks they're going to do and what they've said, the earnings and sales are just so powerful that it could be very much like a Monster or a Taser, because they'll just keep printing the earnings. But like, I've just seen this chart before way too many times. Tilray was in about 2017 or something. Let me go to the weekly. Sorry. And this is how you develop a feel for stocks, I think. I think this is very valuable, what I'm doing here. And I apologize, it might be a little long-winded for some of you. But I think this is a very valuable resource because I could imprint in my mind, I've seen this before. I know how this game ends. I just don't know when it's going to end. Now, in a perfect world, I'm long the stock and I'm trimming it on the way up into this, but I just sold it, much sooner than, the last few days. I'd been out of it for a number of days before that. So, but here's Tilray, and once it topped, it topped. Game over. Tilray is the same quality as SMCI? No, no. But it's, look, stock that made a huge, huge move. What about Agora? This was one I remember that I was all bowled up on. Had great earnings and sales and a really cool story. And there was even good sponsorship. I remember there was a hedge fund that I followed that had a position in the stock, and that had me all excited. And early, like SMCI. Let's go to the weekly. I don't know why the pattern rec doesn't see. Maybe it was just too deep, but the stock goes from 40 to almost triples and tops. And now if we go to today, when they top, they top. Again, I want to make this clear. This seems highly, highly, highly unlikely for it to do something like this. But if the top is in, if you want and you want to keep it, be down to I would say the tiniest of core positions, because you're probably going to have to endure a lot of up and downs along the way. SMCI, anything else that no. And look, it was fantastic stock. Fantastic. If you bought XYZ at 400, let's say, and you sold it at 900 3 years later, you'd be ecstatic. That'd be a fantastic trade. So the fact that it occurred so fast, don't be, you shouldn't think of it as like, oh, well, I don't want to sell it. I'm a long-term holder. I'm this, I'm that. The stocks will tell you when they need to be out. And I think the writing was on the wall in this one in the last few days. All right. Next, NVIDIA. So a little bit of stalling. You've got earnings here in 5 days. It's going to be very, very interesting to see how that plays out. NVIDIA has done nothing wrong. Looks a little tired, but I just don't see it going up or down very significantly into the report. The report will be key. The option market is pricing in a pretty big move for a stock this size. I think it was like, I think I saw on Twitter 11 or 12% or something like that. So that means it could be up 70 points or down 70 points, and that would be well within the normal realm of volatility for the stock. So keep that in mind as far as your position. But easily, obviously, the leader in this market. So it's the leader, and what it does on that earnings report will definitely influence the rest of the market. Okay, so SMCI, NVIDIA. What about like CrowdStrike? And for disclosure, I do not own NVIDIA any longer. Again, sold it too soon, unfortunately. I do have a tiniest of position relative to what I had in CrowdStrike, trying to see if I can, learn to sit better. Very much like NVIDIA, doing nothing wrong, acting great, earnings in a handful of weeks. ARM. So I just think it needs time. I definitely want to find a way to get in this. So if you're in it, I'm sorry. I'm hoping it does a little shakeout down here like this, so I can get a chance. But acting great, tremendous power out of this space. Meta. Nothing wrong. It probably, does something like that. Like, what does it do when it gaps up? Go back and study. So here, built a flat base. Here, built a large consolidation. Here, built not long enough to be a flat base, but tiny consolidation. So I would expect sideways-ish for that. That would be kind of how I would think the normal action would be for that one. NVO acting great. Do not own NVO anymore, unfortunately. I messed this trade up. Common. I love the narrative of NVO and Lilly, of course, but I just didn't handle it very well. So you have to, for a stock like this, you have to be a little bit more patient, allow it room to breathe. And that's fine. And there's nothing wrong with that. I'm just not very good at that with size. I'm very good at putting on size. I'm very comfortable with the risk reward of that. But, I also get wiggled out a little bit easier because it is size. Looks great. What else? PDD. So China has just gotten obliterated, the overall, and this stock has done tremendous. So from a contrarian standpoint, I sort of think like, the bad news, how can it get any for China is so bad? Like here is CAF, which is the A shares in China. I mean, 71 to 13 in the last 17 years. It is China, so you have people you got to consider that in your thought process. But I don't know, the risk reward just seems very, very good for some of these names. PDD being one of them. Hopefully, this could be a shakeout below the 50-day. So, watch list candidate for me, very much so. Snow. I really love this name because I did really well with it in here. I do own Snow, trying to be patient with it, acting really well. It's down 1% this week. Earnings in 12 days. Celsius. So I do not own this one. I don't think, well, I'm sure I've traded it before, but the earnings and sales are very powerful. I don't love the product. I know a lot of people do, so I'm in the minority. Tough stock, tough stock. So you kind of have to know what you own, but setting up Celsius leader. I'm just basically trying to check all the boxes on leading stocks. Are there other leaders out there? For sure. I know there's a lot of talk about the market being narrow, but I don't know. For what we do, if you want to own 8, 10, 12, 15 stocks, I don't think the market's all that narrow. There's stuff to buy. Let's see here. Weatherford. So oil and gas, not that great. Leadership. Now the relative strength is not going to be all that great, but pretty good earnings and sales. So Weatherford, if you wanted to diversify into a different group, is on my list. The next area, I think, if I'm right, and how am I right from listening to other experts in the case, is if AI is real, they're going to have to, these data centers are going to just need all this, how are you going to get to all these data centers and get to them fast and get that information fast? So Coherent, Ciena are two names I do own that would be part of that process. It's not perfect. It was down 4%. Earlier in the day, it was up. So I thought, oh, it's going to set up with a really nice short stroke. The weakness in the market near the end of the day killed that process for me, but I still think it's fine. 4% after being up 27% the week before. I can live with that. And so this could be like a little potential short stroke candidate. Ciena. So it's coming out of this long base. Consolidations aren't great patterns. It's probably my least favorite pattern, but it's been marching higher and doing okay. And I think I said so. I do own Coherent and Ciena. Uber, I do not have that one. Comes out of this flat double bottom, acting great. They announced a buyback, I believe. Leader. ServiceNow, a little bit of red here, unusual versus here. But so you had one little fake out, back up, little fake out, back up. So could this be a fake out? I would guess that your next stop is going to be something like that. So if you own that or considering that, what else is left? Coin, I think they announced earnings today. Yeah, 142%. Not a great close, but the market didn't close all that great. And, a little bit, from low to right up to the cup. Um, you probably don't want to be buying at that point. If it's gone from 114 to 187, you probably should have found a way to buy it somewhere earlier if you wanted to buy it. Not interesting to me. I don't think this is something I would own, but I don't want to argue with the leadership as well. DraftKings. So had a little shakeout on earnings, closed very well. Great quarter. Texas Roadhouse, right? TXRH, I think, or TR. No, I got it right. Gapped up on earnings. So something a little slower, but what's wrong with that? 27% in 45 days. So I just went through what, 2, 4, 6, 8, 10 of about 15 stocks. And I'm sure there's 15 others I could have picked, but for the sake of brevity. All right. So let's get into the quote of the week. And it's Puneet Kothari, managing partner of Techni Capital. YouTube video you can watch. It's an older video. I'd watched it before, but I liked his thought process on, concentration. There is no merit in your 16th best idea. And I'm paraphrasing his thought process in here. Am I sized correctly? Talks a lot about that. When a stock goes against you, you can't be small enough. Totally 100% agree, right? We always have too much when it's going down. And when a stock works, you can't be big enough. Totally agree. I think back to my original positions on CrowdStrike, NVIDIA, SMCI. What's the other one that hurts? I think there's one more that stings. And you just POWL, POWL, that one. And it's working, and you can never be big enough. And so that's just the game. It's a very difficult game. Position size is so important. It's the hardest thing. It matters the most. I saw on Twitter, and I don't want to call out the people, but I saw on Twitter a guy was talking about maybe it was Meta or some stock. It doesn't matter. But here, here's my third 10 bagger or what, that he had in his portfolio. And somebody else, I assume he was trolling him a little bit, but he had a valid question. He says, well, what percentage of your portfolio is it? And the guy didn't answer. He didn't respond to that question, at least not that I saw, but very valid point. What good is, 100 shares of SMCI? If it, it's nice, tells a great story, and you can go on Twitter and tell everybody you had SMCI at 400 and sold it, now it's 800. But I'd rather have 1,000 at 400 and sell it terribly at 600. You get the idea? Or have 1,000 at 400 and sell 500 at 350 and 500 at 400. And it's just terrible. It would be awful to do that, but it would move the needle money wise, depending on your portfolio size. So you got to have enough that makes a difference, but not too much that you can't handle it right. And I'm experimenting always with this, and it's very personal for everybody out there, but I'm always trying to figure out a way where I can have, I'm very good at getting size right away. I have no problem with the risk if I'm wrong. When I have a problem with the pain of the gain, as Marty Schwartz would say. Marty Schwartz was in Market Wizards and wrote what name of his book, Pitbull. he says, I always like, he goes, I love to ring the cash register is what he would say. And I agree. I love to ring the cash register too. So I try to fight that urge by peeling off a little bit. And so want to get better at peeling off less and less when it's working so that I have more and more if it keeps going. And that would have been for some of these names ideal. Another thing to think about is like where you are in the cycle. So if we're early in a potential new bull market, I should do that less. I shouldn't peel off like I normally would. We're coming out of a roughly two-year bear market. I know the indexes don't show it, but it was a pretty nasty bear market. A lot of stocks went down 50, 60, 70%. So we could have a lot of runway here. Now, fast forward 4 years from now, and your market's running like this, and the S&P's at 8,000, then yeah, I should be peeling off much quicker as they start to go up. So think about it. It's important. It's the straw that stirs the drink. It's so important to performing, making a difference in your portfolio is the position size. Okay, everybody. Well, have a great weekend. Market Smith at investors.com, 800-424-9033. The market is closed Monday. It's a holiday. Great. Love 3-day weekends. I think I will be back next Friday, so we will talk to you then. Have a great weekend, everyone. Bye-bye.